Alright guys, welcome back to my channel, and today I just want to be doing a quick video on real and fake market structure shifts. So I'll be using this schematic diagram to illustrate what or how to detect a market structure shift. So I'll be saying like three things about market structure shift. Now when you're looking for a market structure shift, it depends on the level you're looking at, because you cannot just come into the market and start looking for a shift in market structure if you are not at a level of your point of interest where you're interested in a level where you want to take price from. So let's just say we have this to be a bearish movement. As you can see, price is going down. So now let's just see that we are looking at this other side of the market. Maybe for now is not visible, just imaginary. This level here, this level here is a POI from the higher time frame. So this white box here is a POI from the higher time frame. So if we see price come down to this box, maybe our order block, breaker block, or any kind of block here on the higher time frame, we want to see a market structure shift from this level, maybe vedio or any other thing. So depending on the time frame and your POI that is around this level, that's where you look for your market structure shift. So you can see how price came down and mitigated this level, which we were expecting that price would do that. Then after that, we had a shift in market structure. Now two or three characteristics of a market structure shift is that: number one, you should look for it at a higher time frame point of entry or point of interest, which is your POI. So let's call this box our 4-hour order block. And now this market structure shift have one of the features, one of the characteristics, because it is happening around the higher time frame point of interest, which is this white level here, this white box. So the second characteristics is that the last high formed, like this is a bearish movement, the last high form will be traded above very well. That's in a layman's language, but we are going to break the last high with a momentum to any of them which you understand. That's what I'm just trying to say. So we want to see price trade above the last high it created with a momentum, with a force to show you that we are about to go bullish. So this is the second characteristics that have happened here, which is more likely going to happen in every correct market structure shift. And the third one is that we want to see a candlestick close above the high, which is almost the same thing, because there's some momentum, or there are sometimes markets can just consolidate above the high of these candlesticks. Then if you go to like the 15-minute time frame, at most the 15-minute time frame, we want to see candlestick close above the 15-minute time frame, like the body. Or let's just say if you're using 1 minute to look for the market structure shift, then on 5 minutes, we want to see price trade above the last high and close with a candlestick. Then if you're looking at the 5 minutes for a shift in market structure, then around 15 minutes, you want to see price trade above the last high. So just one step forward. So if you're using 30 minutes to look for a market structure shift, around 1 hour, you want to see price trade above the last high. So all this thing I'm going to explain with the chart later on, but let's just continue with this schematic diagram. So this is it here on the bullish market structure shift. You can see we have price tap into the higher time frame point of interest. We have price trade above the last high created here, and with the momentum you can see, of course, price will also close with a candlestick body around here. So now we are looking for a bearish market structure shift. You can see now what happened there. You see price traded below the last low. Now is this a real market structure shift? No, this is a liquidity point. Now why is this not a real market structure shift? This is not a higher time frame point of entry or point of interest. This level here is not a higher time frame point of interest. Yes, that's number one characteristics. Number two, the last low or price was not traded above the low with a momentum. You can see the difference between this level here and the difference between this one. So you can see that here we saw price trade above this high, and you can see that there's enough momentum, there's enough power in the market. But see how price just came in and more like it just tapped on the level, which is like sweeping liquidity. That's exactly what it did here. So it swept liquidity here. So now this is a fake market structure shift. So people will be looking at this other block to take their sell, and price will just come and trade below, because now this is a bullish trend. We've just shifted the market structure. This is a bullish trend. This is not a higher time frame point of interest. So that's just it. But see where the market structure shift happened properly. Now let's just say from this place we have a higher time frame um point of interest, which is this high. Now look at it guys, which is this high, as price swept liquidity above this old high form. Yes, as price swept liquidity above this old high form. Now this is a higher time frame point of interest. Liquidity has been taken from the old high, and you can see this is the old low, and price traded below with a momentum. Now can you see the difference between this one and this one? Here there is a momentum, here there is no momentum. So you can see how price traded below here. See how price traded below here, showing you a momentum, and this one was just a sweeping liquidity. And after price traded below here, you're very certain that since we've taken out the higher time frame, or since we are around the higher time frame point of interest, we are expecting price to start going down after the shift in market structure, because we are using the higher time frame as a backup. So since we are using the higher time frame, it's more like a higher probability. So the higher the higher the time frame you use, the likely, or the more, how am I going to say this so you can understand? Okay, the higher the time frame you use, is more high probability you have on that trade setup. So if you use a higher time frame, you have a higher probability, provided you're trading using the whole liquidity concept, obeying all the rules that govern the technical analysis. So here you have that price swept out this old high, and after sweeping out this old high, this is the higher time frame point of interest, POI, and we have that price broke here with a momentum. See the difference? This is not at a higher time frame point of interest. This is a higher time frame point of interest. So let me just quickly go into the chart. Let me not make this video too long. So let me just use gold. Gold always have too many setups. So let me just go to gold chart, so we can just do what we have to do, and I'll just show you how to identify, and I'll just try to use like different time frames. So this is gold. Okay, let's use like the 4 hour time frame. We are going to mark out our our point of interest on the higher time frame. So this is the 4 hours time frame. So let's just say we are marking out our point of interest on the 4 hour time frame. Let me delete all of this. So let me delete all of this. Now let's just start with this point of interest here. Okay, let's just say, excuse me, let's just say I go to this level here, this other block here. This is a point of interest here. This other block here. This is a point of interest. Now you can see that this is a higher time frame point of interest. So what will you do in the higher time frame? You wait for price to come to your higher time frame point of interest, then you go to a smaller time frame to get a market structure shift, because if you're waiting for a market structure shift here, it's going to take longer time to play out, just like you have to wait for price to break this low. So this is 4 hours. It should take about 3 days to break this low. That means it will take you longer time to confirm your entry, and you have to wait longer to take a trade. So let's just say if we use it if we use the 4 hours, we will go down to the 15 minutes or the 5 minutes to look for a market structure shift. Now we want to be looking out for shifts in this box here, where we have our higher time frame point of entry. So we go to the 15 minutes. So now This is the other block, and inside the 15 minute, look at what happened here. This is the, let me just take out this arrow, then zoom in. This is inside the box here, inside the region. And now where do we have our last low? This is our last low. Now what is it? We have the three major characteristics I mentioned earlier. Now we have that we are seeing price tapped into our higher time frame, and the second one is momentum. See the momentum, this whole candlestick traded below here, and you can see that we closed below here on the 15 minutes. So even though you check on the 5 minutes, you can see how perfect it looks here. This is the low on the 5 minutes inside our point of entry, or point of interest, sorry guys. Inside our point of interest, price took out this low and uses this large momentum to trade below this last level here, showing you a kind of control of the bearish movers, or the bearish marketers in the market. So now we just wait for a little retracement, then we join the market. That's it. This is the shift in market structure. Now let me just check the higher time frame. Let me see if I can look for a market structure shift, which is a fake one around here. Okay, let's just take here for example. So this is a higher time frame, but here is there's no like confluence around here, but you can still get a market structure shift around this level. Meanwhile, it is not a higher time frame, point of interest. So if you go down to 15 minutes inside this other place here, you can see that you will see a market structure shift here. Or let's just use 5 minutes. This is 15 minutes. Let's use 5 minutes. So it should be clear enough. You can see that this is a market structure shift inside this box. This is a market structure shift, guys. This is a market structure shift, but it's not in a higher time frame point of interest. So if you check here 1 hour, what are you looking at from this place here? There is no point of interest aside this other block here, but this is like a liquidity to me because we have other block that are unmitigated. That's why even before I came here, you see me draw this line, deleted that yellow line, because I was actually targeting this other block because I took here to be a liquidity level. So that's why you see the market structure you got inside this level was a fake one. And if you look at it here from the 15 minutes, you can see that there's not too much momentum here. There's not too much momentum here. So looking at it here, you see the momentum here is very low. There's no momentum. But if you look at this one here, look at this market structure shape, guys. They are not the same thing. This one has a momentum here, but it's not at a higher time frame point of interest. This was before the other block. So most people fell for this one. Most people fell for this one, but it's not before the higher time frame point of interest. But this was the correct one here. This was the correct one. The only characteristic this one had was the momentum. It had the momentum, but it was not in a higher time frame point of interest. So that's why if you take this one, you're going to lose, because after this retracement, you enter around here and you just start trading a little, and you see next in price you trade and take out you or stop loss in the market. But if you wait for your higher time frame point of entry, you have a higher probability to win more trade. So that's just it on market structure shift, and this is more like a bearish market structure shift. So let me see if I can check for a bullish market structure shift before I call it a day. So let me go to, okay, bulls. Okay, this is it here. Now let me show you something. I already drew out this market here. Now this is a higher time frame, 4 hours. We have here to be my point of interest. This is a higher time frame FVG. My point of interest is this level. So until price come to this level, I will not be looking for a market structure shift in the lower time frame to go bullish. That's just it. But now if you see that, if I don't really know where to look for a market structure shift, I will fall for any other market structure shift in the market. Just like here, we should have a market structure shift here on the lower time frame. But yes, I will get stop out here because this is not a higher time frame point of interest. So let me just mark out this level here. Then we go to the 15 minutes. Then I'll show you the market structure shift. then the next one will be here, the next one will be here. So let's go to 15 minutes. So this is it here, 15 minutes, guys. You can see. Or let me just take it lower a little bit to 5 minutes so that you can see so clearly, because at most time we use 5 minutes, we use 15 minutes. So I just want you to know, because when you see it on 5 minutes it looks so good, but you're still doing the wrong thing. So now this is 5 minutes. Inside of this box here, you've seen a clear market structure shift. I will show you a bullish market structure shift here, which is this one. This is the last high. This is the last high. Now, everything here is very correct, but the only thing missing here is that it has failed one of the tests, which is not at the higher time frame point of interest. So that's why you cannot take this trade, because if you're taking this trade, you're gonna lose it. Now look at here. We have that price broke the last high. Sorry, we have that price broke this last high with momentum, which is number one. But the second one is that it is not in a higher time frame point of interest. If you go to the 4 hours here, you can see that there's nothing below there. So we are not trading from any significant area from that level, so it's not supposed to hold. So let's go back to 5 minutes. So although it have passed one of the tests of breaking the last high with a momentum, but it's not still at the right level. So if you look at this other one that went well, you see that inside this FVG of the 4 hours here, let me just delete it here. Let me delete this one. So if you go to this one, then see how this one performed well with this one inside this FVG here. So if you go to the 5 minutes here, where you have the 4 hour FVG, if you check out the market structure shift, you see how nice it looks. Most times it might not give you a perfect market structure shift you want, but everything looks insane. This is it here. This is the last high. This is the last high it broke. Now you can see how price came down a little bit after breaking this last high, showing you that we are about to move. Now it has given you everything you want. Number one, we are in a higher time frame point of interest. Number two, we broke the last high with momentum. And number three, gave us a little bit of retracement for an entry point. That's just everything you want to see in a good market structure shift. Number one, it should react to your higher time frame point of interest. Number two, it should break the last high or the last low with a momentum, showing you fully that the market is is about to change direction or is about to take a new turn, and most likely it should close with a candlestick body. So if you're looking at 5 minutes for the shift, you check the next higher time frame to check if it closes with a candlestick body above. Just that was what I was trying to explain earlier, and you can see that many other candlesticks are formed above here, so it's a good one. But for here, you see there's a little bit momentum, and we just continued bearish because this is not a higher time frame point of interest. So that's just it on market structure shift. And please do well to subscribe if you've not still subscribed, and follow for more videos. Thank you. And if you still don't understand, you can ask your questions where you don't get it, and maybe I might use a live trade to explain next time in my video. Yeah, just ask your questions and comment. I'll be there to take up questions and try to answer you. All right, thank you for watching, and